Alright guys and gals. This is a portfolio update of the Dividend Army, which I also talked about a 7 ETF portfolio. And about 3 weeks ago, I think it was March 26th, I had talked about I had a lot of cash in the account and what I needed to see to deploy that cash. Well, I saw what I needed to see. So I didn't load all in on the bottom. No one's that good, but I felt like when SPY got to around 630, I was like, all right, I think good enough. I think the market's been beaten down. It's oversold. I thought maybe it could go a little lower, 605, but I was like, nah, let's just take the shot because I'm adding money pretty regularly anyway. So, and the real indicator to me was not even the SPY chart, but QQQI, which I love this fund, was paying like a 16% dividend. And I was like, how do I say no to that? The dividend yield was great on SPYI and QQQI. And GPIX, which I also love, was very good. And if you see, like, my average cost shares, they're very much up, and there's unrealized gains that are pretty nice here in a 3-week period for the most part. SCHD, like I wanted a higher yield around 4%, never really got there. But my strategy on SCHD is I usually add 1 or 2 shares a day. It makes me keep the habit. Now I'm going to teach you a little lesson on why you don't want to sell covered calls in a huge bull rally. So as you can see, I have 214 shares of SOXQ here. So I jumped the gun horribly on selling a 65 covered call on 100 of my shares. I sold this for 0.40. So I collected a whole whopping $40 dividend, and I can't even say this with a straight face, but whoever bought that, if they held this whole way, you're a freaking genius. So I salute you because it's worth $985. So that is like over 24x. I'm just doing the math in my head. That's a monster trade in a few weeks. Congratulations. And if they're executing my shares, I'm going to lose 100 shares. Like, it is what it is. Also, XLK, you can see it. I replaced QQQ at XLK because I just wanted to be able to sell covered calls, which now it was a mistake because I could have had QQQ and not had my shares being called away right now at all-time highs. However, I bought at 135.91, not a bad average, and buy shares because I sold 148 call for a whop. I thought I was selling bullshit. I really did. For $10, and I went to $625 for that option. I can't even do the math right now in my head, but wow, what a mistake that was. But whatever, I get paid to lose some of the shares. It is what it is. So I said for this account, because I don't actively manage this is just a login to buy, not to cry. I'm not here to trade so much in this particular account. I day trade in 2 other accounts, and I'm doing great. Not to brag, but I had my best week in ever. I made more money this week day trading than I did in my first full-time job out of college in an entire year. So that's crazy and such a blessing. And I had my best month ever. Not even close. Like, I annihilated my previous best month ever. And the funny thing is, I had my worst day ever, which I just royally screwed up on that particular day. But it's all good. I made it all back, so we're back on track. I can't complain. Life is good. The only thing that's really underperforming in this account is the defense ETF, SHLD. Now, the war tensions have died down. It looks like we're going to get a peace deal, which is wonderful. That's what we want. And then we can go back to our regularly scheduled bull market. So I'm replacing XLK in this particular account slowly with XLKI. I'm going to have probably over another $20,000 in cash on Monday when my shares get called on SOXQ and XLK, which is fine, and I will deploy that into this particular account. I do like XLKI, and I also own it in another account, and I have always averaged into it. It's a monthly XLK dividend ETF. It's exactly like SPYI or QQQI, but it uses the XLK ETF, which is a great ETF because the top 3 holdings are NVIDIA, Microsoft, Apple, which are all phenomenal companies. So that's what's happening here. I have just this small bullish SOV credit spread. I opened this actually yesterday. You know, the max profit would be $450 if this expires above $76. And I purchased it for $175, so I can make roughly $265 if I let this expire in the money. It's just a little extra thing I do in this because I don't like it to interfere with my other accounts. I have another account where I'm starting to restart to do the wheel method, and most of my stuff got called either today or Wednesday or earlier in the week. I was using QQQ there, I was using Nvidia, Palantir, Google, like a lot of my favorite stocks. So I will make another video next week of the wheel method and what I'm doing there. But now it's going to be really focusing on selling to open puts because I don't like to buy a lot of things when the market's up at all-time highs. Now it can continue to go higher and higher because we did consolidate for many months before we got the correction based on the war. And now they're just absolutely annihilating the bears and the shorts. And it's kind of funny to watch because it's beneficial to most of us. But, you know, eventually it will come back down and then we'll have another buying opportunity. So the lesson here is don't sell covered calls after a correction. Wait until the market starts to get a little toppy. And even when you think you're selling lottos, it's not always a lotto. You know, I've had this happen many times, but as long as we're making money and we're growing, who cares?